Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus will be on Lupin's Q3 FY25 earnings. The company has posted a consolidated net profit of 858.9 crores in Q3. That marks a 38.8% increase over last year's same quarter. Even the revenues have seen a jump of 10.6% year on year, now coming at 5,618 crores. The other parameters have also recorded a surge over last year. EBITDA, for instance, has seen a 32% increase over year on year. And what we've also seen is that the margins have expanded significantly by 408 basis points to 25.1% from 21% in Q3 of FY24. The North America sales for the company have grown 12.3%, contributing 38% of the total sales. Let's actually welcome the top management of the company on the channel to help us understand what has really contributed to the earnings this time around and whether the strong performance can sustain in the upcoming quarters as well. Mr. Ramesh Swaminathan, Executive Director and Global CFO, and also the Head of API Plus at Lupin joins in. Warm welcome to you, sir. Great set of numbers coming in from you on Q3, sir. And all the parameters have actually seen solid set of growth. Do tell us, sir, the key driving force behind the quarterly performance, and do you see further building onto the growth that you've posted in Q3 in Q4 as well, sir?
Thank you for having us on. It's indeed a pleasure being out here. Yes, we are very pleased about the set of numbers that we have been able to present this quarter. But as you can see, it's obviously a trend that we have kind of exhibited over the last several quarters. And that's essentially coming in from secular growth across various markets. And growth would obviously mean that the pipeline has been pretty robust. In America, we continue to do well thanks to Mera background in recent times. But more particularly, the pivoting to more complex stuff, the respiratory stuff in terms of albuterol, Spiriva, they continue to do well. We also had the blip in terms of sales like products like levothyroxine and the like as well. But as you can see, the growth is secular across markets. We continue to do well in Europe also, thanks to, in fact, the entire respiratory portfolio out there. We've done well in markets like the India region, of course, which is, of course, a very important part of our overall growth story. And API has, of course, contributed as well.
Yeah.
Whilst the top line buoyancy has been there, we have also been aided by tailwinds in terms of input costs and the mix, of course, contributing to, in fact, a higher gross margins. We've had a tight leash on costs, and all of this have certainly contributed to a healthier bottom line in terms of EBITDA margins.
Right. So, sir, if I ask you for FY25 end, what is the growth that you expect over last year or top line, bottom line? Margins you posted at about 25%. Will that be possible to end the year with also, or will it be more towards 20 to 21%? How are you looking at it, sir?
There are two parts to the story. Essentially, whilst the secular trends would be kind of, there would be some volatility amongst quarters, principally because the fact that there could be a spurt in spends in terms of R&D and the like. In fact, in the fourth quarter, we do expect a surge in R&D. It's a little lumpy out there. But in a general sense, the market should continue to fire. So we would expect growth and EBITDA margins for the full year to come around 23%, which is a huge step up from what we were doing last year. So essentially, the overall secular trends are going to be maintained. And we would like to see this continue into the next fiscal as well.
Right. So, sir, you did talk about R&D spends that could probably go up. I want to understand on R&D, is the focus shifting more towards, say, biosimilars or specialty drugs, high margin complex generics? What exactly are you going to be priority areas as we go forward, sir?
We have been highlighting the fact that our pivoting to more complex stuff, has been there for the last several quarters, so to speak. So a larger chunk of the spends is essentially coming in from respiratory, the complex injectables, the 505(b)(2)s that we're pursuing there. And given the green shoots that we're seeing on the biosimilars front, given interchangeability in America, I think that's something which will certainly go higher going forward as well. We, of course, would like to spend a larger quantum of money on specialty because we nurture ambitions in that direction as well. Apart from that, you'd also appreciate that we look at differentiated products for the India market. So I think given all of this, you would think that the absolute numbers associated with R&D spends are certainly going to go up. As a percentage of sales, it might sustain at the same levels. Perhaps it'll here and there, but it is in absolute terms, it will certainly go up.
Absolutely. So also wanted to just get a sense on your ANDA approvals that you've got from the US FDA. How are these fitting into the broader product portfolio strategy? By when do we finally see them, contributing to your overall top line, sir?
So that's been on for some time now. So next year, for example, some of the bigger ones would be potentially something like 12-Vaptan. Here, the background will also continue for some time to come. The when you speak about the respiratory portfolio, we have Albuterol and Spiriva. Though of course there is heightened competition for Albuterol in particular. But having said that, we are also looking at complex injectables kicking in next year, glucagon, Risperdal Consta. Uh, so all of those would certainly help in bolstering liraglutide. Those would help in bolstering the top line and obviously contribute to the bottom line as well.
Hmm. Okay, sir, do tell us, your Somerset facility recently cleared US FDA inspection as well, and that was without any observations. Tell us what are you doing to ensure that all your plants remain audit ready, especially in your key markets like US and Europe, sir?
So there has been a renewed surge in terms of focusing on quality and compliance at the factory level. So if you recall, about a few quarters ago, we had 5 sites, which were under warning letters. So that included, Somerset, we had Goa, we also had Pithampur. So all of this are now out of it, essentially. Whilst we've had some problems with Tarapur, and Mandideep, which I think they are kind of languishing only because of the fact that it's not been inspected as yet. We are always in a state of preparedness when it comes to FDA audits. We pay a lot of attention to this, and obviously the fruits are there to see.
Sure. Sir, do also tell us, given the increased regulatory scrutiny, even in the domestic markets for Indian pharma companies in the US also, what are the steps that you're taking to first strengthen your compliance, mitigate your risks as well? And even when it comes to the Indian pharma companies facing pricing pressure in the generics market, how are you differentiating yourself in this competitive space, sir?
So when it comes to the India market, as you spoke about that in particular, so we are
Yeah.
ensuring that Schedule M adherence insofar as all our third-party, vendors are concerned.
Hmm.
When you speak about the third-party manufacturer and the like, clearly that focus is on, and this is really required by the GMP, the FDA authorities in India. Clearly, we are also upping the curve when it comes to, investments in technology leading to better compliance and the like. And that's an ongoing measure. You'd see more of that going forward as well. We are also looking at artificial intelligence cases to kind of augment our overall capability on the quality control front. So clearly, all of this is important from our perspective. And it helps in building in resilience and mitigating volatility in terms of our earnings.
Right. So also give us a sense of how, most of the major pharma companies are also expanding their footprint when it comes to orphan drugs, novel drugs as well, in terms of rare diseases. How are you positioning yourselves? Is that a space that you would be stepping up the pedal on going forward as well?
So I would put it across as our interest in specialty.
Mm-hmm.
So clearly, we are also looking at specialty, though of course the areas are still emerging. We of course have a orphan drug in terms of Nemuscla, addresses muscular dystrophy when it comes to America Europe. We're of course trying to launch it in other parts of the globe as well.
Mm-hmm.
It's early days, but it's doing fairly well. We've always nurtured, ambitions on other specialty areas, especially in areas where we have a lot of strengths. The respiratory area suggests itself. So clearly, we would like to kind of ramp up on that. We'd like to up the spendings for that when it comes to research and the like. And clearly, one of the things that we are identifying is if there is going to be an inorganic angle to the entire specialty story. And so we would like to to work on that and see where it gets us.
Absolutely. So you also recently announced as a company your transfer to of the OTC consumer healthcare business to a wholly owned subsidiary, Lupin Life Consumer Healthcare. So what's the strategy behind this move? How will Lupin position your subsidiary in the competitive OTC market?
Firstly, I think it goes into overall patient centricity paradigm that we're trying to profess. So clearly, we're looking at every avenue which would help in creating creating the niche for us. It's the wellness program, so to speak, which I think is very important from India perspective as well. Clearly, the broad skill sets and the market dynamics associated with, in fact, OTC products would be very different from the pharmaceuticals. And we would like to obviously focus our energies on that to help it to grow much higher, much more than what it has in the recent terms. And that's the reason why we are kind of spinning it off into a subsidiary company.
Okay.
At some point of time, we would perhaps look at bringing in a strategic partner or a financial partner who could help it spin on its own axis, grow much further. And
Okay.
that's the overall idea.
Okay. And sir, how is Lupin really leveraging AI and digital technologies to enhance drug discovery, manufacturing, or even your supply chain efficiency? How are you using technology?
Clearly, artificial intelligence has a big role to play. It's going to be a game changer of kinds, and we kind of recognize its potential. We have looked at use cases across all areas of of the value chain. We've looked at cases for marketing, for looking at quality, for manufacturing, and supply chain, and apart from, of course, procurement, finance, and HR, and the like as well. We are clearly very happy with what we have seen. We are in ramp-up mode when it comes to a few of these cases at this stage. The story is still not out, essentially because it's early days. Everybody is experimenting with a lot of stuff, but we are placing a lot of monies and efforts in getting us well hooked onto the AI journey.
Okay. Lastly, sir, any mergers, acquisitions on the anvil?
We are a virtually debt-free company, and from that perspective, we have a lot of balance sheet space to kind of accommodate that. And of course, we have always been acquisitive. There are pretty interesting assets available both in India as well as in the specialty space. So we are looking at a lot of proposals, but time will tell what really comes about.
Well, thank you so much, Ramesh sir, for being with us on this special edition. Again, congratulations to you for the strong set of numbers. All the very best for the upcoming quarters as well. Hoping to see you very soon on the other side of the next quarterlies.
Thank you very much.